Hey guys, in today's episode, let's talk about a 1031 exchange. What is it and how can you profit from it? Did you know that you can sell an investment property, reinvest in another, and delay paying taxes? That's right. It's called a 1031 exchange. And today, I'm going to break it down for you. A 1031 exchange is a special tax rule that allows real estate investors to defer paying capital gains taxes when they sell one property and buy another one that's similar to that property. Mind-blowing, right? But yes, there's ways that you can save. It's named after the section 1031 of the U.S. Internal Revenue Code. Here's how it works. When you sell one property, which is your previous property, instead of pocketing the money, you reinvest it into a new property. It's called the replacement property. By doing this, you do not have to pay taxes on the profits right away, but there's steps to it and you must follow the guidelines. It's like trading one house for another one without the government taking a cut up front. And we all know that paying taxes is on top of our mind. Why use a 1031 exchange? Well, it's a tax savings. If you sell one property and make a profit, you normally pay taxes on the gain that you made on that property. With the 1031 exchange, you don't have to pay on those taxes immediately. You're going to do it later. You can use the money you'd have spent on taxes to buy a bigger or better property, growing your investments faster. There's rules, and you must follow these rules. The rules for a 1031 exchange are both properties must be investment properties. You can't use a 1031 exchange for your personal home. It only works for properties used for business, rental, or investment purposes, which is a lot of you guys. Like-kind requirement. The new property must be like-kind to the one you're selling. This doesn't mean it has to be the exact same property, but must be made for investment purposes. You follow me so far? Well, let me give you an example. Selling a rental house and buying an office building, selling the vacant land and buying a shopping center. What? Well, you can be upgrading. You have 45 days from the sale of your property, which is the first property, to identify the possible replacement property. You must close on the new property within 180 days of selling your first one. You must use a qualified intermediary. You cannot touch that money, and that's very important because a third party that's qualified has to hold the funds, do the paperwork, and they handle all the process. If you skip one of these steps, you're paying taxes. Remember, the property has to be equal in or greater value than the one you sold. That's why you keep adding to your portfolio. Let me give you an example. From one rental property, say you want to buy another one. Remember your timelines. Your first property is worth $500,000 and you sell it for a profit of $150,000, which is the difference. Now, you would pay capital gains on that $150,000. But if you use a 1031 exchange and you follow the rules, you can defer paying those taxes on the $150,000, which is a lot of money. Let me give you another example. Trading vacant land for an office. Let's say you inherited a piece of land that's worth $300,000. You sell it and use a 1031 exchange to buy an office building worth $350,000. You meet the like-kind requirement because both investments or both properties are investments and you're getting another asset, which is going to be giving you revenue. These are pitfalls to avoid. Missing deadlines is very important. These pitfalls, when you miss a deadline and you don't follow the rules, you're out of luck. That's why it's very important to use a qualified person or company that can do that 1031 exchange. You need to do your homework and find who can do it. If you need assistance, we can guide you with that. Remember, if you don't follow the rules, you cannot get away from paying capital gains tax. Also, if you touch the money from the sale of your profits of that first property, you're going to be paying taxes. So if you follow the rules and if you have any questions, feel free to reach out. But I just taught you a way how you can be upgrading, creating your portfolio, growing your portfolio, and at the same time, putting some money in your pocket, creating that wealth for your family. If you like this content or you want to hear different type of content, please reach out to us, subscribe to my channel on YouTube, or send me a quick email or give me a phone call. I'll be happy to help you. Talk to you soon.